I uploaded a video titled 13 Years of Trading Advice in 13 Minutes, and it kind of banged. And so today we're going to try to catch lightning in a bottle twice, so please God, subscribe and comment. But this time, instead of trading advice, we are going to dive right into the mistakes, the heartaches, the struggle that comes along with the journey to becoming a consistently profitable trader. If you're new here, my name is Will Johnson. I'm a former professional Call of Duty player who's been actively trading and investing for the last 13 years. So number one, and this one's gonna feel a little bit generic, but bear with me, it's trading without a plan. Everybody knows you need a plan. Everybody's read the books, you've seen the interviews and the podcast, you gotta have a plan if you're trading. But almost without fail, there are a very large subset of traders out there that will hear that and it's like it goes in one ear and out the other. You need to focus on one particular thing in the market, and that's especially true if you're just starting out. You need to focus on a niche. The market is so vast, it's so wide, there are so many different things that you could potentially trade. You're gonna overwhelm yourself if you're trying to do everything. You don't need to be everything to everybody. You don't need to practice 10,000 kicks once, you need to practice one kick 10,000 times. Bruce Lee said that. And he was right. Bruce was right. So write it down. Have a plan for your setups. Have a plan for your scanning, a plan for your entries, your exits. It should feel mechanical. It should feel systematic. Every good trader trades with a plan. But let's really dive into the weeds of trading a little bit. Let's talk about mistake number 2, and that is having my sizing backwards. Okay, so in the stock market, there is an inverse relationship between win rate and then risk reward, meaning as your win rate goes up on a particular setup, the risk reward, or the amount of money you're risking for every dollar you stand to make, decreases. So there's plenty of traders out there that live on the outer edges of this, and they might trade with a 90% win rate strategy, but for every dollar that they risk, they only stand to make 20 cents or 30 cents. That can actually work. Vice versa, there are strategies out there where maybe you have a 15 to 20% win rate. Actually, that's pretty low. 25 to 30% win rate, but for every dollar you risk, you stand to make $4. That can also work. But the real problem here is how you size both of those strategies, because if you are constantly oversizing a low win rate strategy, what you have to understand is if you have a 30% win rate, the chances that you are going to lose 5, 6, 7, sometimes 10 trades in a row over a long trading career, it's 100%. And so if you are risking large amounts of your total capital, say over 2% or over 5%, you're almost mathematically guaranteed to draw down over 50% on your account. And if you run the math, so if you go into a 50% drawdown, you need to make 100% on your account just to get back to break even. And vice versa. There's people that will trade these 90% plus strategies. They'll trade those with small position sizes, not realizing that the real key is you need to make a lot of money before you blow up in order to trade like that. And they just don't make any progress. They're green 10 days in a row and then they blow up 2 weeks worth of work on the 11th day. And so it's more and more important whenever you trade a setup with a 90% plus win rate that you size that much bigger than you would a 25 to 30% win rate setup. Number 3, setting daily or monthly profit targets. Please do not do this. I know everybody has a goal coming into trading. You want to make $1,000 a day. Unfortunately though, the market and the gains that you will get out of the market, they are not linear. It's not a job. It's not like the more you work, the more you make, and you're not getting a paycheck from your job. Say you got $1,000 goal for the day and you're up $900. You might think, great, but because you didn't hit your $1,000 goal, now all of a sudden you try to make that extra $100. And you try to make that extra $100 in a setup that doesn't actually fit what you normally trade, and say you lose $300. So now you're up $600 on the day. But no, my friend, that is not what your brain says. You're not up $600, you're actually down $300. Because remember, you were up $900. Now you're down $300, so you try to make it back. Before you know it, you're down $2,000 on the day, and you turned a $900 winning day into a $2,000 losing day, trying to make an extra $100 because your dumb ass, and I'm talking to myself in the past, had a arbitrary number that the market didn't even know existed. The market does not know what your daily goal is. And if it did know, I promise you it does not care. So please God, don't have a daily target. If anybody tells you you need to have a daily or monthly target, please run, do not walk in the other direction. I can't even see what my screen says for the 4th mistake. Oh, there it is. Picking tops and bottoms. There's a very famous quote here, and I might butcher it. It's by Jesse Livermore, one of the most famous speculators of all time. It's over 100 years ago he said this. One of the most helpful things that anybody can learn is to give up trying to catch the last eighth or the first. These two are the most expensive eighths in the world. They have cost stock traders in the aggregate enough millions of dollars to build a concrete highway across the continent. If you're looking to short a stock, you don't need to short it at the absolute top. If you're going long a stock, you don't need to try to buy it at the absolute bottom. Just don't try to catch the top there, but you just need the meat. You just need the middle of the move. Take your money and run. That's all you need to make a living. You don't got to be perfect. You really do not. Mistake number 5 is comparing somebody's chapter 20 with your chapter 1. The comparison game, it is evil. There are people out there making millions, if not billions of dollars in the stock market all the time. Some of them are just very good. Some of them get lucky. Some of them have insider information. But at the end of the day, you don't have any control over what they do. The only thing you have control over is you, my friend. And so when you open Twitter and see somebody posting their $50,000 day, who cares? You don't know how much risk they were taking in order to make that 50K. What if they were risking 200K? And I guarantee you one thing, if they had lost the 200K, you won't hear about it because they won't post about it. You could have a perfectly good strategy, a perfectly good trading process, making an amount of money that you're happy with and you're comfortable with, and trading feels not easy, but simple for you. Keep that, hold that. Don't let whatever somebody else is doing, or maybe not doing, dictate what you do. Your chapter 1 or chapter 2 is not somebody else's chapter 1 or chapter 2. Everybody's at a different point in their journey, and they're learning different things, and different lessons are applicable at different levels. The last video I did, or 2 videos ago, there are things that a level 5 or level 6 or level 7 trader is working on that a level 1 trader doesn't need to concern themselves with. They're not at that point yet. Compare yourself today with yourself yesterday, not whatever somebody else is doing on the internet. That's stupid. So number 6, this is letting your P&L dictate your self-worth. It takes a long time to learn how to trade correctly, and a lot of times it requires you to sacrifice other parts of your life in order to figure it out. It's very easy in those times when you don't have anything else other than trading to let your P&L, let your success or lack thereof in trading dictate how you feel about yourself as a person. So if you have a green day, you're a genius. A green month, you're a consistently profitable trader. But oh my God, you have a red day, you're a dumbass. And a red month, you're a complete failure. And it starts to have this negative effect where you're essentially bipolar to everybody else in your life. And you're doing this thing that they don't really understand. And you're letting your work bleed in to everything else in your life. You have to know that when you walk away from the screen, it doesn't matter. Yeah, we're competing for money. Okay, I get it. But there has to be that disconnect where when you're focused and you're trading, it's everything to you. It's your entire world. But when you turn it off and you walk away and you go to be with your family, you realize that it doesn't matter at all. And being able to switch that on and off every single day so that people outside of your trading sphere have no idea whether or not you had a good day or a bad day. That's how you know, because you're not letting that bleed into other aspects of your life. Oh, number 7, this is a good one. Doom and gloom content. I'll tell you what, I used to follow every single article from Zero Hedge. They sound so smart. The Michael Burrys, the Zero Hedges, you know the guy, but he's always pointing out the, oh my God, this black swan's coming, that black swan's coming. And it's not to say that, like, somebody's got to do it. But these guys, well, quite frankly, they're just wrong a lot, even though it sounds like they're right. And I have been kept out of some amazing, some absolutely incredible investment and trading opportunities in the past because I gave in to listening to the quote unquote smart money or the smartest guys in the room. And the truth is, it's bullshit, because the people in power, they have an incentive for things to go higher. This entire system that we built, people love to say that the stock market is not the economy. The economy is not the stock market. And I'm here to tell you that that is bullshit. There is so much riding on this thing, so much money in your 401ks and all of the retirement plans, all the pension plans. It is quite literally life and death to keep this thing going. And you've seen that throughout the years. Whenever there is some sort of crisis, how quickly The powers that be, whether you want to talk about the federal government or the Federal Reserve or whoever, they will come to the rescue. The Fed put the plunge protection team, whatever the hell you want to call it. They are incentivized to see the market go higher. This entire system is built for asset holders. If you hold assets, you get rewarded over time. If you don't hold assets, you get left behind. And the easiest way to either not buy assets or let go of the assets you do have is by reading that dumbass doom and gloom content on Twitter. Don't do it. Number 8 is too much screen time and not enough breaks. Look, you might think that you putting in 16 hours a day is doing some wonders for your trading. And maybe at the very beginning, there's some truth to that because you do have to put in a lot of time to learn a lot of this stuff. But eventually you got to have some balance. What did Matthew McConaughey say? You got to keep it below the belt or whatever. And I'm mainly speaking to people who you already have a process built. Maybe you're a level 4, level 5 trader. The more time you spend at the screen staring, the more you're going to be looking for something to do. It can get very boring and it can kind of wig you out to the point where the more time you spend staring when you don't need to, like you're not doing focused work, you're just sitting there doing busy work, it's actually hurting you in the long run. These days for me, I do my pre-market stream in Green Wall Street. I trade from 9:30 to 11. I take a break from 11:30 to 1. I come back, I see what's happening in the afternoon, and I have this very healthy relationship with my work and my personal life. And like I said, there's a time and place for everything. This is mainly speaking to people who are a little bit further along in their journey. Like if you're just getting started and you got no responsibilities or a family or whatever to do, okay, yeah, spend all day at your desk. That's probably necessary, but at a certain point, know when to turn it off. So that's it. Obviously, there's more mistakes you can make out there, but those are the real P&L killers. Not only the P&L killers, but the life killers. If you can heed this advice, another mistake I used to make, should I do one more? I used to think that you could learn from other people's mistakes so that you don't have to make them yourself. And what I realized over time is that also is kind of not true, at least for me. Because you don't get that visceral reaction. It's really hard to learn a lesson unless that lesson evokes a serious emotion within you, whether that's good or bad. A lot of people are gonna watch this and be like, all right, whatever, man, like, okay, I won't do that. But you probably will do that. Sometime in the future, 2 years from now, 5 years from now, 10 years from now, you'll come back and say, I wish I didn't have to make that mistake on my own. But I'm here to tell you it's okay, because I did too. People used to tell me stuff all the time, in one ear and out the other, and it wasn't until I learned it myself that I actually made some changes in order to help myself. So either way, that's it. 13 years of mistakes. I'm sure I'll make plenty more.